on. So main question everybody wants to know, is this pump real? What's going on? Is this a fake out? All those kinds of things. A lot of people, I think, have PTSD from being in crypto this long, and rightfully so. So I'm going to talk about some of the points that maybe the bears are bringing up, kind of touch on what we've been looking at saying this week. Because in Telegram, this was on Sunday, when I saw this, that's what you want to see. That's a breakout. This is on the hourly, but that's where these moves start. So when you see it like these little candles like that, breaking, closing above structure, a little consolidation and continuation, that's exactly what you want to see. It doesn't mean like FOMO in, that we're going all-time highs necessarily, but that's where these moves start. And then as the move continues, closing back in the range, but pumping on the weekend, I said it leaves a CME gap. It's like watching your team score, knowing there's a flag on the play and get called back. But we're going to talk about the CME gap here in a minute. Also, somebody asked, are we sure? I was like, I definitely don't think so. It's about how the move looks. And I'm going to talk about this, talking about these moves on Bitcoin up, they can be sneaky. People are bearish, and then all of a sudden, bam. And we continued to be bullish, all week, going into honey badger mode like we've seen many times before. What's up, Raven? Yeah, let's definitely go. And I'm going to talk about what these what my take on the market. Sorry, I just got a message on my screen saying it had lost audio or something. So if you can't hear me, please let me know in the comments. But let's talk about some of these points. So CME gap. Now, okay, I'm gonna talk about it in two terms. So the one that was just left this past weekend when it pumped, and then for like people that are like overall greater bears, they're talking about these CME gaps at like 90K and stuff like that. And I've touched on this on streams before, but I'm gonna touch on it again. Because if you look up what the definition of a CME gap is, it talks about that it closes on the weekend, that the CME closes on the weekend, and that if there's an aggressive move up, then it leaves a gap. It says weekend or overnight on the definition if you Google it. If you Google it on I look it up on like Investopedia or something like that, it just says references how it's closed on the weekend. So you look at the hours of the Chicago Mercantile Exchange, they are closed on the weekend, but for Bitcoin, and so it depends on the product, because a lot of them, they close for like an hour during the day. So for Bitcoin, they close 60 minutes from 4 to 5 p.m. Central Time. So 4 to 5 o'clock in Chicago, I guess that's 5 to 6 in New York. They close for an hour. Okay. So the gaps at 90K, they're daily gaps. They're gaps that were created from that 60-minute daily, so I don't consider those valid CME gaps, not to my understanding of the concept. My understanding of the concept of the CME gap is like a market balance thing, that it'll go down because those people that trade on CME didn't get to, buy at that price or whatever, or sell at that price if it's the other way. So, yeah, I don't think that the market being closed for 1 hour on Tuesday, because that's when the gap between 90 and 92K, it was a Tuesday afternoon. I don't think it's relevant. Now, what about, this gap though? Well, this is kind of interesting. Marty Party, he's a great follow on Twitter if you don't follow him. Wall Street's is perping. CME announces 24/7 trading for crypto and futures options. This could be something to keep, maybe CME gaps aren't going to be a thing anymore, and no one's going to care about the one that it left over the weekend. I don't know. It's possible. But if you zoom back or go back a long time in the history of Bitcoin, so we're going to go way down here. We're going to go way back. Wow, we're going to keep going down, because I'm not even on the CME chart. 1 second. Oh, sorry, I just realized I wasn't sharing my screen anyway. So go way back in the Bitcoin history before, right when we started the ascent to all-time highs. There's a CME gap at like 9K or something like that, somewhere in here. Maybe that's it here. Something like, I think I said 9,600. Yeah. So this sidelined a lot of people because they thought, they're like, oh, this CME gap's going to get filled. Matter of fact, in the bear market, when it was coming down here, I heard some people even saying that, that CME gap's finally going to get filled. So the kind of point I'm making is like, if the market's going to run up, it can run up and leave that gap. Like, it doesn't have to get filled. And then especially you're getting this news about the CME trading 24, or not the CME, but the stock exchange trading 24/7 perps for Bitcoin. So I don't know. It may not it may or may not get filled. Yeah, and to my understanding, I'm not a CME gap expert. To my understanding, it's a market balance thing. That people say that's the theory, that it needs to come down. Like, those participants didn't get a chance to buy or sell at that price. But I just don't really think that a daily gap matters. That's just, and I've done a little bit of searching. I don't really see much talk about it. I just see people on Twitter calling it a CME gap that has to get filled. Now, this last one, it was on the weekly. Hey, maybe it will come back down and get filled. Kazoo, what's up, bro? All right. So also, we hear about liquidity below and stuff like that. I see people posting these maps from CoinGlass, the free one, and I've used a couple paid ones, and they don't always show the same picture as what I see on people posting on CoinGlass. But from my experience using liquidation maps, they tend to work well when price is ranging. When price is range bound or in a broad channel, it normally does, like, those larger areas of liquidity normally are a magnet. On this one, this is the one that's like $50 a month. It doesn't really show some crazy amount below. But I mean, I guess that doesn't even matter in this case, because every time price breaks out of a range and goes up or down, it's going to leave a concentrated pocket of liquidity. It has. I mean, I've seen it many times when it would range in. I don't know if it was here or here, but like all the times I've seen it where there's a lot of liquidity and then we start breaking out, and it goes back to what I just said. When we are ranging or in a broad channel, it tends to go to those areas of liquidity. But when you're breaking out, then, because by that theory, Bitcoin or any asset that's got that heat map, who would just stay in a range forever, and it would just continually just to take people out. I mean, if it did that forever, people would quit trading. So I just kind of feel that it works well when you're ranging, but if you're in a breakout type of mode, breakout price action, then it's bound to leave that liquidity there at some point. When you're breaking out of a long range, it's inevitable. It has to, in either way. And I've seen that for breakouts and stuff. So that's why I think it goes back to what I always talk about. What's price doing? Is it in a range? Is it breaking out? Is it in a tight channel, or is it in a broad channel? And you operate accordingly. Now, we are still kind of in the range. I'll talk about that towards the end of the stream, but it's breakout type price action. And I'll talk about that in a little bit as well. Now, talk about some of these bear points. But some of these bull points that I've been taking into account as well. I have never seen stable coins minted at the rate that they have been recently. I mean, this is just going, we're just now at September 30th, all those mints. I mean, big amounts, USDC especially. I mean, USDC is just like all day long print, and then 2 billion on USDT at night. Like, I never really seen that either. But I mean, stable coins being minted, in my opinion, that is a great sign. That is one of the main things you want to see for that to like confirm that the bull market is still going on. And when it's been printed like this, and I put this out on Telegram, I think that this supersedes any kind of CME gap or anything like that. And this guy right here, Cryptocurrently, he's a great follow. He's somebody I like a lot. His videos, he's been pretty on the money this cycle as well. He doesn't look at the candlesticks as much as I do. He's more like an overall, but he's good. And the point in this is Global Liquidity Index, which is similar to M2, but I think it's actually a better indicator. It broke out and made a new all-time high. So, and M2 I think did as well. So, you're fading the global liquidity kind of thing, and then all these stables being minted. Thoughts about Aster? Do you think it'll go to top 10? I wouldn't fade CZ. You know what I mean? And just that whole narrative for like buyback coins is really hot. They kind of came up this last several months. Pump, Hype, Jupe even buys back. So a lot of these coins, I think it's a good setup that they use the fees to buy back the coin and add buy pressure. So CZ is the GOAT in crypto. I mean, he's like if anybody runs the space, it's him. This is his project. He said he's not even going to be on Binance anymore, like involved, nothing with Binance. This is his baby. So hard to imagine. And I know like a large percentage of coins are in his hands and insiders and stuff like that. But these are also people that know how to sell. So when it's trading, and getting millions of dollars of volume a day, they're just going to have some kind of bot running or something like that and just constantly selling like, smaller amounts for them and relative to this, not like smaller amounts of what we would do. But I don't think that's going to be much of a concern. I mean, at some point it's going to, bear market or probably dump hard, but I think Aster is probably pretty good. All right. So I'm going to talk about so first, let me talk about some bear points. Okay. This RSI divergence that they were talking about. And I addressed this in streams a couple times. I'm not going to go over all that, just to say that I didn't see it as the same as when we topped last market cycle. And that's what a lot of people were comparing it to. All right, so now it's turning up. And here's the thing about RSI divergences. It can be an RSI divergence until it's not. So it technically, like by the book, to confirm an RSI divergence, it needs to go below the low in between those highs. So say like here, where if you recall this a divergence here, and it actually did go between these lows here, but then that was like the bottom. It went just to maybe a little lower, but it didn't really play out. And now, you see it curling up like this and you're getting a strong candle. If you're saying the divergence was here to here, well, it never broke this low. And it can curl up and start making a high, like a higher than that. And then the move is still in play. Like the divergence is invalid, at least in my opinion. And then this MACD crossover strategies are like, they look good when you back test them a lot. But this is the thing with them in real time. Like, it looks like it's curling back up and it's going to go back up. Like my take, like and this is why I don't really use indicators. I think they're good to reference. But these two things, it kind of looks like bear fake outs to me. And yeah, I'm not saying that just yet. Like it remains to be seen. So we'll see how it goes. But yeah, that's kind of what it looks like to me, that this RSI can keep going up. This crossed over, but then it didn't like aggressively go down and kind of stayed flat. And now it's curling back up. If I was heavily short on the market, these two things, and I was basing it kind of off indicators, these two things would scare me a little bit. And it's not like I'm dancing on the bears' graves just yet, but I think the people that were using these is, this is why you got to be careful with indicators, or you got to wait for more confirmation. And then, i.e., you get a not as optimal of entry, whether you're selling or buying. I also see a lot of people talking about volume, this, volume, that. The volume drops off. There's no volume. I know a lot about volume, and I think volume is good when you want to match like the volume to the candle. That can be a good way to use volume. But in crypto, it's not like stock where, so like Tesla's being traded on the New York Stock Exchange, and that's all the volume. In crypto, it's traded across lots of exchanges. I think, most people consider Binance USDT the main pair. And that's what we kind of look at for the volume. But think of all the OTC buying and selling. None of that's reflected in the volume. So I think volume can be a useful tool, but I think in crypto, you have to be careful with it. And how I normally more so use it is you match, like, does this volume node match the candle relative to the other ones around it? For example, if you're getting a downtrend and you start getting like a downtrend or uptrend, doesn't matter. And you're starting to get small candles bodies with high volume, then that's a good sign the trend's becoming exhausted, because that means a lot of orders are taking place and it's changing hands, but it's not moving much. You know, the candle's small, but the volume's big. So that can be a sign of like exhaustion in the direction it's been going. So, you know, those are some of my takes on the bear points. And this is how I see it right now. All right. This is the daily. All right. So, so for people that listen to me a lot, especially, I say some of the same things a lot. Like I say like, well, this is ranging price action. This is, you know, and I talk about when I say ranging price action, I say overlapping bars. The bars overlap. There's more wicks. You get bars changing colors. You get gaps being filled quickly. That is that's what ranging price action is. And I'm saying that a lot because like 80% of the time, the market or more, the market is in a range or broad channel, and the broad channel and range, you operate the same way. So let's look at this bear leg down after the all-time high. Like that wasn't a good candle. That was a, you know, bullish and a bearish engulfing outside bar after all-time high. So that was not good. Then you see like the follow through after that. Okay, and you got a follow through candle, not great. But then you got some little green ones, and look, all four of these bars overlap. And then same, you get another move down, up, and when gaps are being filled, it's like, okay, like if you couldn't see this part right here and the move was just here, then this would be the gap here. And I talk about this in streams. A lot of people listen to me. So the gaps get filled, you know, same kind of thing, goes down, this right here, filled with the very next candle. Then even when you talk about the bottom, then this would be the gap. They're just filled easily. So you're seeing all the characteristics of a leg in a trading range on that leg down. I was still cautious, you know, and I even get, you know, I'm not above being, you know, scared a little bit sometimes by the market. People posting all these liquidity things and stuff like that. You know, I look into it myself. I don't take what anybody says just and say, oh, okay, you know, but I still thought it was better that chances up. And I said that down here. I said the chances are better to go up from here than down. And that's what I honestly believed. And now this leg here, you know, you're getting the same kind of characteristics, overlapping bars, wicks. I mean, look at all these, this 1, 2, 3, 4, 5, 6, 7, 8, 9 bars in a row overlap. I mean, that is the hallmark of trading ranges, constant changing colors, all these wicks. You know, I'm explaining this because this is how I like decipher the candles in it, what it is in a range, and all those kinds of things. So this is a rangy leg. And this is what people are screaming, a lower high. And that wasn't good. And that weekend in Telegram, I put out a pretty long video saying, you know, this is a lower high, ranging price action. I closed about altogether over the weekend, like 30% of my leverage positions. But I didn't touch spot. I said like spot, we'll just hold that or whatever. So comes back down, but this is still a rangy leg, and that was a bad candle, but it didn't break and close below anything significant. And then you got a green follow through. So then, you know, it is, you know, making like a lower high even, and you're kind of cautiously optimistic. You got this trend line here too, 200-day moving average that was in play. But even though I thought that I didn't buy into that it was going to break below 100K based off what I was seeing yet. I was going to have to see a little more to think we're going below 100K, much less to 90, like some people were calling. But now, after it made this bottom and went up, all right, look at these candles. How much overlap is there on these candles? How many bar changing is there? This one almost changed green. There may be some exchanges where it was green. Are gaps getting filled? All right, so this would be the gap. No. This would be the gap. No. Gaps are not getting filled. Bars are not overlapping. You have a very minimal color change. No wicks. Where are the wicks at? You know, you got a little one today. But this one, I wasn't even, like, if price pumped today, that was cool. I just wanted to get a day where it just didn't dump, because we had some dumps later in the week and kind of messed up the chart. So when we look at the weekly, look at that. I don't give a fuck how much, or excuse me, but whatever, how much, people say heat map this, CMA gap that. I have to go by the candlesticks. That is bullish. That is not a topping pad. That is a breakout type move. So, I'm not saying that we're up only, but I mean, because we're probably going to pull back here. I actually didn't want it to hit all-time high today and leave any kind of wick. I would rather just stay at like 122 or something and close here and not even had a wick on the top. So that's how I see it. I'm sorry, I have to stick with oh man, I'm sorry. I just saw that, couldn't see the chart. Shit. I'm bad for that, guys. I'm sorry. And then I can't see the comments. All right. I'll say all that again. But I'll say it quick. You just heard it. So this is the leg I was talking about. So you see there's the bars overlap, lots of overlap, lots of changing colors, lots of wicks. That's a leg in a training gauge. All right. Came down here, found a bottom. You guys heard me say all that. Then this leg up, same characteristics, overlapping bars, lots of wicks, lots of changing colors. And that was the lower high. Then down here, same, you're still getting a lot of changing colors, wicks, overlapping bars. But this move up, that's what I'm saying. Where's the bar overlap? There's hardly any, not much wicks. The pullback bought up quick, no gaps being filled. So I'm sorry, I'm bad for that sometimes. Or sometimes I do click it, but I feel like I don't click it hard enough. And I'd rather would a price have stayed here, not even went up to try to test that all-time high. But what we do want to see here, weekly looks great. Now daily, what we want to see here, you're probably gonna get some pullback at some point. You're gonna get red candles, probably touch this is how I saw the top of the zone. So maybe we come back and touch this. I mean, it already kind of did come back here and touch that. But we want to see some kind of consolidation pattern with all-time highs. All-time high or prominent swing high, you're not generally just going to break right through it and keep going. That's normally not going to happen. You need to test it, get rejected, and then form some kind of consolidation pattern under it or a bullish pattern, and you want to, the more tests up into the high, the better, because the more times it tests into the high, people that have limit orders there, shorting or selling, they'll just say shorting on leverage. And then it comes down a little bit, but they are not hitting any meaningful targets. And even if they're not staying in too much, they're not in a loss, but just in barely profit, and it just keeps coming up there around their entry. A lot of them are just like, oh yeah, this ain't what I thought. I'm gonna, get out. So the more tests up there, the better. And I don't expect it Monday to just break through and continue up only to just green candle, green candle, green candle. If it's a breakout, the breakout should turn into a tight channel and then start to flatten out and eventually form a range at some point. But the longer it breaks out, the better. So let's hope we get we don't want to see strong rejections. We don't want to see big red candles. We don't want to see long wicks. If we get even a week or two, honestly, of some just kind of consolidation here, forming a triangle, inverse head and shoulders, fallen wedge, whatever, that's really the best, in my opinion anyway. That's the best case. And then you catapult off that pattern, break above the all-time high, close on get a good close on a high time frame, and then that would be the best confirmation that you're going up. I know some people say that the Russell 2000 is a good indicator. And also I've seen Total 2 is about to break out or right on the point. I think Total 2 is probably a good indicator for altcoin season. I think that's a better one than Total 3, in my opinion. But the Russell 2000 is not something I'm overly familiar with. Now, I will touch on this real quick because I've seen a lot of people start to reference this. The business cycle. Now, I've put out for a few months now that it seems to me that the business cycle peaks line up with the Bitcoin tops better than any of these other macro indicators. I didn't hear a whole lot of people saying it. I know Raoul Paul says but he's also saying it's global liquidity, so you got to kind of pick one. And it seemed to me like this was the best one. It even lines up with like some local tops and bottoms that aren't like the all-time highs and stuff. So interest rates are good. Cuts are good for the ISM, the business cycle. We want it to break above 50 and continue up. And that's why I think from that standpoint, that's when we can really get the run. That this is an odd like market cycle, obviously, like because a lot of people believe we haven't even seen the biggest gains yet, and then a lot of people think the top's in, or a decent amount of people think the top's in. You know, if I was in that camp, then this would kind of I just wouldn't want to see this go up. I would maintain that bear case or whatever I thought that, but I would if I saw this break over 50 and continue up, I would probably change my tune because it's been a really good indicator in the past on the Bitcoin price action. So anyway, I didn't want to do a real long stream. I look at a few coins. I know people love Medicaid, and still this Head and Shoulders still valid, still holding this level of support. This is still in play, guys. This Head and Shoulders is still in play. That's really the best I can tell you. This would be a good sign. This weekly candle closing a little green doji, not getting continuation down. So that's what we want to see for Medicaid. And you know what? I'll even look at OMI because I know a lot of people follow me like OMI. So let's see how far it's come down from gap support. So this wick right here. So that's the only gap fill, not this one. So this is good. This is pretty good for OMI. You got the big break up. I talked about in previous streams, took out a 200-day moving average, which had been its nemesis. And this is what you want to see it just consolidate. I mean, if it keeps breaking out, that's cool. That's fine. That's all great. But things can't continue forever. So from a technical analysis standpoint, and I give altcoins a little more grace with the wicks and stuff like that. But you're getting bars changing and wicks and overlapping bars. But look, bigger bars now, smaller bars, inside bars. And that means like the candle is the previous candle engulfs the next candle, and that's a sign of shrinking volatility, and that's good. Well, it means that at some point, most likely the range pattern or the consolidation pattern is getting closer to a time where it's going to break out. That's what you want to see. Normally, you get a move up like this, and then like big candles, lots of volatility. That's shaking people around. You're not going to get continuation, breakout into higher levels. You're going to start this is what happens. The candles get smaller, and then eventually a breakout happens. Also, I don't have Mask on my watch list because it's not on exchange, but I like Mask, the privacy coin. Zcash breaking out. That's a good sign for the privacy sector. And in the description, I don't have it in there now, but I'll put my Mask link in there to use the browser because a lot of these VPNs, and I post this on Twitter, they don't have your best. They've been bought by people that don't have your best interest in mind anyway. And Tor is funded by the U.S. government, so Mask is a real utility project. People always ask about utility and things like that. So Mask has got utility, and the token is integrated into how everything works. And I think it's for a privacy coin, that's one that I've allotted. What I'm going to allot to privacy, I put on Mask. Now Chuck over here on Deck Screener, consolidating this triangle. I was hoping it would break out there, but the triangle is just kind of extended. So still consolidating for Chuck. We got some good stuff. It's Chucktober. We're going to be doing burn lottery soon. We're constantly burning tokens, doing buy and burns. I mean, not like pump or anything like that, but we're doing what we can with buy and burns. We got another big update coming out sometime, and hopefully we'll have it done by October. And then we're still doing the things that we always do. Don't give up on Chuck. A lot of meme coins, they just post. That's all they do. With Chuck, we do other things. And then another meme coin that I like, Stray Dog. Let me go to the weekly. So yeah, this is good for Stray Dog. You get this move up, consolidation. This will be more towards the bottom of the range. Now it could come to these candles here, but it wicked up. Let's see what it looks like on the daily. So he's at support. I think the risk is like you could go down a little bit, like if you wanted like the optimal bear, and it's a 20% drop because lower market caps, they're bigger moves like that. But then just a test back up to the high for Stray Dog is almost 100% gain. This coin has been listed on a few exchanges that they didn't have to pay for. MEXC, I think Weeks listed them. I wish they would have done that for Chuck when we were new and really hot. They didn't. No one ever reached out to us like that. But $74,000 of volume, pretty good, especially given that it's listed on some exchange now. I've talked to some people from the team about this project. The good guys. I think Stray Dog is a good low cap meme coin. And currently, before I end the stream, let's see what Bitcoin's at. Yeah, even when we look at lower time frames, like you get a wick and a red candle, but it's bought up quickly. And this is because traders are seeing this kind of breakout price action. It didn't even get to the 20-day EMA and brought up. It doesn't mean it won't dump a little more, but New York session's already coming past. You had a little bit of a pullback. I like the odds of it closing above 122 for the week. I honestly do. That would be like here around that. I think that would be great. I mean, the higher the better, but yeah. All right, guys. So I'm gonna end the stream. I didn't want to go too long and ramble on, but I wanted to address some of the bear points and my take, and also to kind of because it was a good example of explaining the bars. I'm really sorry I wasn't sharing my screen at that time. I went back to it, but it's just a really good example of trading leg on trading range and all the characteristics of it. And this is not that. Now, that doesn't mean it's a guarantee that it's going to break out and continue to go. Nothing is a guarantee in this game. Anybody is telling you this is programmed in, that's programmed in, nothing's programmed in. This greatly adds to the probability. So, this is what you want to look for. This is just what I said you want to look for. To break through a range or all-time high, prominent swing high, you want a strong leg up that's breakout type price action. And you do have breakouts down here in smaller time frames along the way. Then you expect it to be rejected initially. Then you wanted to form some kind of consolidation below that. And that's what ETH is basically doing, for this all-time high up here. It's consolidating, maybe we can get a head and shoulders or something like that. Right now it's really just a range. See on the weekly. Yeah, on the weekly, you see it's just a range. You had the attempt to pull down. I said the first target, when we were up here, if you were looking to buy a pullback, would be like 39.60, I think is what I put out. Went down to 38.11. Filled this wick right here. Went down exactly with that wick right here. No test of the bottom, then a long wick up for the week and bullish candle for the weekly, most likely going to close above that. So ETH looks good. ETH and Bitcoin look good in my opinion. And I'm not somebody, FOMO this or anything like that. I don't look at it in those terms, but you have to know the difference between a range when it's range bound or breakout price action. And when it's breakout price action, that's what makes you think that, we could keep going. And you see that price action, like I talked about, the leg in the trading range after we made this after you made this low here and like this leg up, no, I wasn't overly because this is more like a leg in a trading range, but then we made that higher low. And now that's not like a leg in a trading range. That's like a leg in a breakout. That's a leg that means serious business. And it wants to go places. Now, Binance could always send, $100 billion worth of Bitcoin and dump it. I don't know, those things happen, but this is what you want to look for. So by the way I look at things, and my track record has been pretty good. This market cycle, I know a lot of people have been posting and, they called this, I called that. I really think that I've called every single time that it's broken out. Even the last time when we got this all-time high up here, when it broke out, but then it didn't continue, like before this dump here, or somewhere around here, I said that, we may not continue up because this is a breakout, but a breakout is supposed to continue up. You can have some consolidation, but if it's not continuing up, then it can likely be a fake out. And I still think that, these Bitcoin legs up on this ascent in this market cycle, they're getting weaker, and we're probably, closer to the end of the market cycle. Then, you look at the ISM and that kind of suggests maybe it could have a big run. But I actually think that kind of suggests that a big alt run could be ahead of us, because when I look at, so this is BTC dominance, and I have this part highlighted here because this is October 23 to March 24. We had massive alt gains then. And look at BTC dominant. It was ranging. I mean, it's in a lower level than it is now, but Bitcoin was at a much lower market cap than it is now. So, we had massive alt gains here. Like alts and BTC, it had went up, but it ranged during a lot of this period. Like this was not all breakout time for BTC, and alts were doing. I mean, I think I put out 4 alts or 5 that did 100x during that time. So if we just get a run that was like in this time frame, then yeah, I think we'll get pretty good alt gains. This BTC dominance, yeah, it's bouncing a little bit, but these are little candles. So I still think it looks bad to continue down. So I do think some of the conditions are shaping up for an alt season. But anyway, I'm going to go ahead and call it. I appreciate you guys for tuning in. Later, guys.